You're listening to Artistic Finance, show 133. Today we get an update on the Artistic Finance 6K, the $6,000 of investments we made in May of 2021. We're joined by a bond investment CEO, a data analyst, and 3 lighting designers to review how our investments compare to the S&P 500. Without further ado, let's get to the show.
You're listening to Artistic Finance Podcast, where your host, Ethan Steimel, interviews successful artists, leaders, and investors to help educate and inspire artists to grow their wealth.
Welcome and thank you for listening. I'm Ethan Steimel, broadcasting out of New York City, and today I welcome back my superstar armchair investor panel. So first up, the CEO of the bond investing app Liquidify, joining us from Denver, Maithreyi Gopalakrishnan.
Hi, Ethan. Thanks for having me. It's great to be back.
Next, we have lighting designer and project manager joining us from Los Angeles, Ebony Madry.
Hey, y'all. What's up? Happy to be back.
All right, next up, we have a leader in data and analytics at Worldwide Wickets Financial, joining us from St. Louis, Katie Buhrman.
Hi, excited to be here.
And last but not least, the founder of the Financial Independence Book Club, Amy D Lux, joining us from Nomadland.
Hello from remote world.
Is Nomadland San Francisco today?
No, it is San Jose today.
All right, so we are recording this on January 29th, 2023. Hey, Katie over there, can you give us a disclaimer today?
Oh, my usual disclaimer, which is that none of us are here to give financial advice. We are sharing our own experiences and opinions based off of things that work for us, but may not be best for everyone. So you should seek a financial professional if you are looking to get advice on investing.
That is amazing. Yes, we are here because sharing is caring, but also don't listen to what we share. All right, so everybody, thank you for being here. Now, I'm not going to explain the backstory of the Artistic Finance 6K, so if you want to know more about what we're doing, just go back and listen to previous episodes that are titled the Artistic Finance 6K. All right, so first question here, what is the state of the market today?
I can answer this one to some extent. It's very uncertain right now. Like, no one knows entirely what to do about anything from what I've read and what I've seen. So I think there's a lot of just fear about not knowing how the Federal Reserve, like the government, is going to take actions in the next couple of months, whether or not we're actually going to go into a recession, etc. So it's a little bit of a, uncertain situation.
So I have been tracking the market completely zero. But I will say that when I went to check numbers today, it was on the uptick from last quarter. So doesn't that mean things are going well?
I'll jump in there, I guess. I'd say I think we started seeing rebound was that maybe in December. I don't think it is anywhere near what it was before we started seeing the downturn last year. So I'd say like on maybe starting to recover, maybe not. It's like Maithreyi said, it's still uncertain, I think.
So sometimes I work at Bloomberg News, lighting things, and I can't help but overhear what they're saying on air. I felt like last fall it was basically, we're going to have a recession in 2023. So is that still the general idea?
Yeah, I think it's something that could be on the horizon. It just takes some time to actually see the kind of after effects of what the Federal Reserve does. So they raise these interest rates, but you don't actually see what fully happens to the economy until kind of later, I guess. And there's also been a lot of layoffs. You've probably heard from a lot of tech companies in the Bay Area and around the world. So that's definitely going to start kind of influencing the direction of the economy in the next year, I would say. That's kind of what I'm seeing.
Yeah, I forget because I've always been a freelancer that if a job falls through, I'm like, oh, that's a bummer, one job. And I realize that other people, when they lose their job, that's like a huge thing. Also, I guess a huge impact on the economy because even I don't know this, but I think Amazon and Facebook have been laying people off. They'll say we laid off 1,000 people. And to me, I'm like, oh, that's not that significant. But somehow it affects the whole market. So it must have some sort of impact beyond that. Okay, so I'm going to go give an update on the 6K that Artistic Finance invested in so many years ago and see where we are. So I'm going to jump to my super duper spreadsheet to see where our numbers are. The things we invested in were the S&P 500. We also put $1,000 into 4 different stocks that I picked. Then I picked some REITs, some real estate investment trusts, and then I got some Bitcoin, and I invested in some wine. And then some art, but I don't count that one because I just bought a piece of art. So the S&P 500, from when we first got it, our $1,000 is now $1,023. So it's up 2.3%, or at least my share of it is up 2.3%. So that's good because last quarter we were down 3%. And of that, I've gotten $26 of dividends for what that's worth. So that accounts for that. So then the 4 stocks that I picked wildly vary in degrees. One, SKLZ Skillz, is down 95%. But then another, a lithium mining company, is up 60%. And so overall of the 4 stocks that I picked myself, my $1,000 is now $1,100 or $1,099. So I'm up 9% for those. All right, so the real estate picks that I have, last time they were up overall 1.8%, but I was thinking for real estate that wasn't a lot because I thought real estate is supposed to be super steady and pay out dividends. And these are doing that, but as opposed to being up 1.8%, they're now up 9%. So I feel like they're back to where I would have expected them to be. And I feel like that's a pretty great return of 10%, roughly. Okay, and then Bitcoin. So Bitcoin has been the thorn in my side. I'm not going to call it a regret. I live life with no regrets. But Bitcoin is now down 58% from when I first purchased it, which may sound terrible, but last time it was down 65%. So I'm actually really thrilled that it's on the uptick after a year and a half or almost 2 years of this. So that's fantastic. And then the final investment was wine. I bought 1 case of wine through Vinovest. And after fees, that has now appreciated up to $1,095. So that's up 9.5% from inception. When I add those all together, I am down 5.76%. That's totally cool. I'm actually totally cool with this. So if the S&P is up 2.3%, I'm trailing the market by 8%, 9%, which sounds terrible. But I realized that I can't believe I haven't noticed this before, but everything is up except for Bitcoin. And everything is beating the S&P 500 except for Bitcoin. So actually, if I were to remove Bitcoin out of the investments, I would actually... Well, I don't know math, so I don't know if I would be beating the S&P 500, but I'm pretty sure I would because everything is up roughly 10%, except for the S&P, which is up 2.3%. So that was like my big highlight and takeaway from today, being like, oh, you know what? Other than that terrible choice of Bitcoin, which is 20% of the portfolio, I actually like stocks are doing what I would expect them to do. Like they're doing well. Like I'm not... By choosing like a variety of things, it's actually done well, even with the recession and blah, 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 blah. So that's how I'm feeling with our investments. So question for the group, or maybe I'll answer this first. And the question is, should we sell anything or should we rebalance anything? And I'm just feeling good this time around, even though I'm trailing the S&P 500 overall by 8%. I'm blaming that on Bitcoin. And I'm feeling very happy with these investments.
I have a comment on that because, I typically, aside from my Fundsies Masterworks one, which I'll get into later, I typically invest in index funds with a pretty aggressive portfolio. And I was just going to like set it and forget it. I'm in for the long term. But we read A Cat's Guide to Money by Lillian Kerbeck on our FI book club premiere today. And I learned something from that book that I thought was really interesting, where she talks about rebalancing. And one thing that I didn't think about, because I wasn't going to rebalance because I'm happy with what I purchased. But rebalancing, she says, is, points out, is good to do I think she says once a year, because when if you buy and your stocks are performing well and you are making money from them, then if you're balanced where you have a certain percentage of stocks and a certain percentage in bonds, then when you are gaining stocks because you've picked a stock that is performing well, then you will end up with a higher percentage than you may have, went out for. So that is actually how rebalancing can come in handy to keep you with that risk level to be, or your target date to be what you expected. So I thought that was interesting if anybody has another comment on that. But it seems like you should just have rebalancing regularly in your portfolio, no matter how it's performing, at least once a year, I think.
Yeah, I hear you. And I think that's fantastic. And I will say that the way I set this up was the worst possible way to set it up, which is I bought a bunch of things. And so rebalancing is so problematic for me. I mean, I could do it, but aforementioned, I'm not so great with math. So like trying to figure out what exactly, I think I would be inclined to just sell out of all the individual picks and then go into the S&P 500 and then find like another index fund that I could have some sort of like distribution of percentage of things. And then that's how I would start to rebalance. But I feel like when I look at 4 different stock picks, 4 different REITs, 1 S&P 500, 1 wine, and 1 Bitcoin, I'm like, oh, that's so many things for me to rebalance. Hence an argument for if I were to do it differently, I would just do index funds and just have like 2 or 3.
Yeah, I think, Ethan, I'm in a similar boat to you, whereas like I just like go in and I'm like, oh, I like this company or I support their like mission or theory. So it is for me like there's a whole bunch of like individual things. So I'm like, how do I rebalance? I also recently like was reading something about how often to rebalance, and I was like, oh, I haven't done that like ever, so I should probably do that.
Yeah, and I've sort of gone with the philosophy of just buy and hold it forever. And so I haven't thought about the rebalancing.
Unless for me, I'm like, this isn't doing as well. And I gave it like 6 months. So like, I'm outie. Like sometimes I'll do that. So then I'll just like sell everything off. But yeah, typically I'm also like a hold on, like you got it. Let's just sit here, hold on to it.
If everyone's cool, I'm going to move on to your all investments. And Ebony, just because you're on the chopping block here. And I'm really... Okay, because again, I don't really watch the news, but I haven't been able to avoid this whole Twitter meltdown situation. And the last time we saw you, you had purchased Tesla. And yeah. I just have to know, how's it doing?
Okay, very crazy, because like I was like, I can't look at this because it's going to stress me out. It's doing very well. And so I'm like, I'm not really sure what's happening, or like, are they like playing with something in the background? Even just recently driving around like in the outskirts of LA, there are so many new like Tesla like warehouses. I was also in Texas recently, and there are like 2 new Tesla warehouses there, and I was like, okay, so like something has to be going well, because you're opening up all these warehouses and like manufacturing shops. So yeah, I'm up. I'm up. I'm just gonna ride it out and not ask any questions.
So when did you buy it, and how much are you up from that point? Like, are you up 1%? Are you up like 1,000%?
I'm up like 7%. So I'm not just gonna ride it out. Like I was like, oh, okay, Mr. Elon, like we like this. Like, let's just sit here for a moment.
And they just had earnings this past week and had a really good quarter. Like they shot up like, I want to say it was like 17% or something the other day, like in one day. It was a lot because of this past quarter.
Yeah. So if any, like I need to do more research, because like I haven't done any, but I was just like, okay, Elon, like, thank you so much for everything that you're doing with this Cybertruck thing. Really appreciate your work here.
Well, I kind of half heard this, and so I don't have all of the information, and there is a term for it apparently, but I heard that they increased production and dropped the cost way down so people can buy Teslas for like 30 grand less than they did before. And that saturates the market and increases competition. So I would guess that might be related.
That makes more sense because literally the other day I was talking to my girlfriend. I was like, do I want a Tesla? Like, I was like, they're like more affordable now. Like, do I want one of those? So that makes so much more sense. I should definitely look into that more to see what else is going on.
Hey, Ebony, side note here. Carl Faber is putting an episode together about EVs by creatives, like people who own them or whatever. I feel like you should maybe join in on that because everybody that's on his episode, on his panel, has EVs already. But you not having one, I feel like that might be interesting for you to sort of like try to decide like, oh, should I do it? Shouldn't I do it?
That would be really cool. Mostly because they say like California is the perfect climate for them. In the sense of like the weather doesn't fluctuate a lot. So the battery actually doesn't like depreciate as much as it would in climates where it gets like very cold and very hot, which that like affects like the battery life and charging. So yeah, I'd be down.
Also, Amy was wanting to know if anybody actually owns Twitter stock. Come on, Amy, we're all very safe players here. Other than Ebony.
At one point I had Snapchat stock, but it was not doing well and I like sold it off. I was like, you gotta go, girl. You gotta go.
Also, I just want to say that the S&P 500, which by the way, I'm gauging this by how my S&P 500 goes. So this may vary slightly from the actual S&P 500, but I was down 3% last time and up 2.5% this time, which means that it went up 5% since last time. So if you're up, Ebony, 7%, you're beating the S&P 500 by 2% this time around, but no dividends from Tesla. All right. So who is up next?
I'll talk. I'll say to correct myself, I looked it up. And Tesla was up $12 the other day. So it was like probably around 10% in one day. But anyway, so for my investments, I had two mutual funds and PayPal stock. Everything has still gone down since last quarter. So I had initially had like 20% in the first quarter that we did this and got super lucky somehow. And then by last quarter, it was down to like 15% overall. And now I'm down to 11% overall. So I think in this quarter alone, I've lost, let's see, I don't have that percentage calculator, but PayPal for sure has been my worst one. It has gone down. It has not it doesn't give dividends or anything like that. The only thing I will say that I think I have going for me on the mutual funds is that I got some dividends as well as like capital gains distributions in December because they do those annually. So I think that has saved me from being even worse this quarter.
Okay, so you're counting the dividends in your total.
In my total return, yes. And I'm reinvesting those as well. I'm like calculating. That's another reason why I have a spreadsheet. I can like calculate how those are impacting because that changes like my share quantity each quarter. So
why was PayPal down, or why are all of them down?
I don't really know for sure. I haven't followed news specifically on PayPal. I know they were having just by virtue of the fact my sister-in-law used to work for PayPal, and so she left a few months ago. So I haven't heard the news recently, but I know last year they were struggling because of I think they were trying to put forth some deal in China to be like a payer there for something that ended up falling through. And then generally, I don't know if it's a competition thing or if it's like, as we've heard with all the tech companies laying people off, I think they might have been part of that. So maybe I'm guessing some of that is tied to earnings and stuff like that too, but I haven't followed it as closely as I should.
Okay, because yours, it seems like your picks are following like what the news is saying, like there's going to be a recession this year, whereas mine have done the opposite.
Well, and that was the thing, because like in the first quarter I say last year, but like the beginning of this thing for us, that was like a complete opposite of what was happening, because I think it was just as the market had started dipping. And I was like, I don't know why I had this super positive return. And since then, it has seemed to like correct and go back to like what the rest of the market is doing. So yeah, I'm not surprised.
Yeah. Okay. Well, still 11% overall is fantastic.
Yeah. I'm not unhappy.
Yeah. Plus the dividends.
Exactly. Which are really nice.
Yeah. I'm in love with dividends now. If I were to live my life all over again, I would only purchase things with dividends. The rebalancing situation for you, are you ever going to rebalance? Are you just holding forever?
With these three things, no, I don't. And I don't, I guess, formally rebalance at all. Sometimes so like not part of this. So like with this and the 1,000 or whatever, I'm keeping it steady. But generally, like a lot of times I'll just look at like balances and kind of figure out like where I can add more somewhere here and there, but I don't have like an official method. It's really like looking at stuff and being like, oh, this seems like it's under allocated now. Maybe I should put some more there or whatever. And then also obviously getting advice from my financial advisor as part of that. But yeah, I have no official strategy there.
Perfect. Yeah, I'm thinking in my own life, like what Nicole and I have with our financial advisor, which is only like a couple ETFs. But I'm having a meeting. He's going to be on the podcast in a couple weeks, and I need to like sidebar with him and be like, "Hey, do you rebalance? Is that a thing we do?"
I assume that's the case.
I'm sure he'll say yes. He always is like, "We need to meet because we're doing things for you," and I'm always like, "I don't know what you do." Like, all right, let's move on to either Amy or Maithreyi. All right, whose investments are next?
Rock, paper, scissors.
Go for it, Amy.
Okay. Yeah. So Masterworks, I think, is the wild card in this group. I know everyone has spreadsheets, and I was trying to figure out how to make mine make sense because it's such a different way of going about things. So they appraise the artworks. I'm not sure how often, but maybe once a year, maybe twice. I know that the first one that I got was Yayoi Kusama, and that was last appraised June 29th of last year. With Masterworks, the way that it works is they buy it, they make it an LLC, then they store it in a temperature controlled warehouse, and it lives there until they're ready to sell it again. I can buy and sell within my own portfolio, but my intention is to buy a work until they sell it. And I don't really know how long that's going to take. So then while it's within their possession, it goes through, these occasional appraisals. So my Kusama has gone up. The gross change that it's implied gross change has gone up. I've got it 12.63% increase. But then the other one that I purchased specifically when I was invited to this group, because I bought $500 of shares of the Kusama, and I wanted to make sure my OCD was on point, and I had 1,000 like everybody else. So I bought a Bridget Riley that day. And what's interesting about this is because since that work is still in its early stages, it hasn't gone through a new appraisal yet. So I don't have any data on what that value increase or decrease is. And so what's happening is that there's a net IRR for my entire portfolio, which for the Kusama is 15.5%. But because Bridget Riley hasn't been appraised yet, that's coming in at 0. So my overall net IRR is down to 7.7%, which is still higher than the S&P 500. So that is fine, I guess. But yeah, it's a little bit of a long run with this one, and just hurry up and wait for the most part.
That's awesome, I think. You're very good with numbers too. So I just want to ask you the rebalancing question. So how are you going to rebalance these things?
Yeah, so this is my fund money account. And so I'm not really planning on touching this. I just want to I want to actually stay with both of these until they resell, because fine arts tend to have 15 to 25% return. And kind of the beauty of Masterworks is that, most people can't buy a multi-million-dollar painting. And so they just break it up. The shares are always $20 each. And if the piece is valued at 1.3 million, it's however divided by 20. It's very accessible, and I just have my little piece of it. But I'd like to write it out and see what these end up selling for whenever that time comes.
I'm curious if anybody else here has done Masterworks or if anybody's thinking about it.
No, I have a question though, if that's okay, Amy. I'm curious, like, how do you actually like resell a share of art when it's kind of like a physical thing? I don't know. Like for the wine thing, for example, like Ethan, I think I told you I invested in a case as well, and you just have the case, and then basically it reaches its kind of peak thing in however many years, and then they're able to sell it at that time. I'm curious like how it works with art and like selling a fraction of an artwork.
Yeah, so this is like the first time that's ever happened. Masterworks created this way to sell fractional shares. So it's valued at the original purchase, which is a real physical purchase. And then it goes through the SEC for its valuation. And then it's very well protected and stored in a physical warehouse. But what they do is when they purchase that piece, they register the singular artwork as an LLC, and then everyone that buys shares is a shareholder within that singular LLC. So I own shares of Yayoi Kusama's Pumpkin, but it's a real physical piece that they have then, opened up to their shareholders or their investors. It's a very unique situation. And I think part of why it's working is because fine arts historically do return so high. And so they've just found this way by buying the physical piece and preserving it. And then if I do want to sell before they sell it within the Masterworks platform, I can put it for sale to other Masterworks members.
So you can trade the share that you own of that artwork on the Masterworks site if you wanted to liquidate your investment before they actually resold it, like outside of Masterworks.
Yes. And one thing that you bring up a good question that I want to investigate, because right now, like the Kusama is valued at 25 and change, but I bought it at 20. But I think that if I sell it early, that is just a projection of the implied gross valuation. So I think if I sold it before it was formally sold, that I would have to sell it at the price I bought it for.
Oh, I see. So it's only like revalued at that later time when it's sold externally.
Yeah, like they appraise it, I think, once a year. So that's why it's now appraised at a higher number than what I bought it from. But in order for, but that's all projection. So if I sell early, they can't guarantee that that's going to be the price when they do sell it. So that's why I would have to sell it at the same price I bought it at.
That's not as cool as I thought. I thought like it would then, if you were to sell it back and then somebody else were to see, oh, there's some open shares, let me get them at the new $25 level. That's how I thought it worked. But so if you want to liquidate before they sell, you just get out what you put in.
Yeah, but they sell out. A lot of these works sell out so quickly because they only buy really high valued works. There's a finite number of shares. Somebody might have missed a Warhol or they missed a Basquiat. Like I wasn't ready to buy when, like right now, there's a Keith Haring for sale, and I'm not allowed to buy it because I have to max out my retirement investments first, and that's a rule I gave myself. So I'm missing out on the Keith Haring, which I'd love to have, but maybe in 6 months from now, if another member sells some of their shares, even if there's at $20, if it's the right time for me, I would still buy that, and I would still receive the higher valuation. So if I hold it until it sells, then I will still get the whatever it's valued at. So if I buy it and I buy it for 20, but its implied value is 25, I'm still going to get the higher payout if I stay till the end.
I got it. So actually there's actually no incentive to sell until they sell. But there is incentive to buy if somebody else liquidates.
Sure, yeah, if that's a piece that you're interested in. They almost always have 15 to 25% is like standard for artworks to return.
And then how long do you hold it for before they typically resell it outside of Masterworks?
Yeah, that's something I'm not really sure. Like, I think it depends on just like regular fine art sales. I don't really know how that larger market works and what their incentives are for selling. That's something I should look into for next time, because that's a great question. I'm not sure how long they hold, or like what makes them decide that it's time to sell a piece. So I'll look into that one.
Interesting. All right, Maithreyi, last but not least again.
So in our experiment, I had two different bond investments. One was the $1,000 of I bonds, and the other one was the JP Morgan corporate bond. The I bond, so basically they are on a 6-month cycle to reevaluate what the interest rate is. So when I got it for those first few months that I was holding it, I think it was 9.6 or something. It was crazy high because inflation was so high. And that's when it was getting a lot of attention. And then in November, they reevaluated it down to 6.89, which is still good, but inflation's down. So the bond is down as well in terms of returns. They will probably, I think they reevaluate in May and November of each year. So, and then the bond that you bought initially is locked into your rate only for those 6 months. Like it also it updates every 6 months. So that's the I bond. And then the JP Morgan bond, the interest rates overall in the bond market are going up and prices are going down just because when the Fed is like raising the interest rates, then pretty much like the other interest rates rise up along with it. But when you buy the bond, like the coupon rate that I bought was at 8%. So I'd get $80 a year, but it would be split up into two $40 payments. So that's kind of like, it's like a dividend in a way. That's what I'm getting. And then the yield to maturity, which is how they kind of evaluate what your overall return, like up until maturity is, based on both the coupon payments and then the difference between like what you paid for it and what you get at the end, is like 4.5%. And that's been pretty kind of consistent actually, since I bought it. So that's, I don't know what that'll totals out to, but decent.
I don't know about the JP Morgan bond, but it sounds like I bonds, if it was 9% when you first got it and then 6% now, and the S&P and this whole thing for us has gone up to 2.3, then you're still beating the S&P 500.
And it just depends on how it reevaluates to in May as well. So it's kind of like for the S&P, you're probably holding it kind of for the longer term. Inflation's hopefully going to continue to go down a little bit more. But at that point, the I bond will not pay out as much, and it might be better to be in the S&P. Overall, I don't know how it's going to turn out, but it's still, at the moment, I guess it's better.
I have two questions for you, if I can. So for the I bond, when you bought it at 9.6, are you locked in for that just for the 6 months or for the life of the time?
For the 6 months. Yeah. And that's kind of the risk of the I bonds. Like Ethan and I talked about this a little bit in the last conversation, but it was a really, really appealing interest rate last year. And so a lot of people kind of swarmed to it and bought a lot of I bonds. But that rate gets reevaluated every 6 months and your interest rate changes. So now my interest rate's the 6.89%. If the inflation's like a lot lower in May, then it could be like 4% or 3% or whatever. And then there's also, there's like a fixed rate and then a variable rate that's included there. And so when they put out the 9.6% one, the fixed rate, like the rate that wasn't going to change for the lifetime of the bond, was actually 0. So it's all variable. So it's a little bit riskier. These are like some of the caveats that I was mentioning when we were discussing I bonds and some of the things you need to consider. So, yeah.
Okay. And you can buy anytime during that 6 month period at that locked rate, correct?
Yeah. You can buy anytime during that period. You can only buy up to $10,000 worth of them in a year, or $20,000 for like married, like the both of you together can buy 20,000 total, but you can buy anytime.
And if you buy like one day before the cutoff, before the reevaluation, are you still locked in for 6 months of it, or are you only locked in for one day until they reevaluate?
Whatever it is, like at that time, and then as soon as they reevaluate it, then you move to the new rate. So if you buy it right before they reevaluate, then you get a few days of the 9.6 and then move to the 6.89 or whatever. It doesn't like retroactively apply.
I also zoned out on your JP Morgan bond. Did you say you had two $40 coupons since you've had it?
So I think I've had one $40 coupon, but it's twice a year. And they have like specific dates that they pay out the coupons. Like it's not like 6 months after you buy it. They have like set dates for when the coupons are paid out. So I think I've gotten one, and then I should be getting one in the next couple of months or so. So it's like $80 total.
Okay, so in total, if you bought 1,000, then you have 1,080. So I think you would in the end you'll be up 8%, hopefully.
So the price is actually what changes that. Bonds they can be confusing. So you will get $1,000 in the end. So my bond expires, I think, in 2031. Wait, 2027. So when it when it matures, I get $1,000 back in addition to the last coupon payment, so the last $40. But I might buy it at a price that's higher than $1,000. So like at a premium. I think I probably bought it for like $11.50 or something like this. Again, I don't remember. I need to check. So then that changes what your return is, because you paid more than you're going to get back, but you also get these coupons back. So then you have to like combine all that information to figure out what your actual return is. So that was the 4.5-ish%. Like that was the number that I mentioned as the yield to maturity. That tells you what your projected return is going to be when the bond actually matures and you get everything back.
I've always thought of bonds as safe and secure, but frankly, looking at Ebony's Tesla, I'm thinking you are both playing the same game here. Only it's just the Fed versus Elon Musk.
The Fed versus Elon Musk.
Sometimes you think they're working together. Oops, did I say that out loud?
Okay, this is awesome. All right, so roughly, Maithreyi, I'm just going to say what percentage you're up or down. We're thinking Maithreyi overall is up 5%.
Sure.
Ebony and Amy are both up 7%. Katie, our superstar, up 11%, down from her 60% or whatever it was. And then I'm down 6%, like the proud human being that I am. All right, but we're all smiling and we're all happy, so I feel like this is a great thing. Let me interrupt our investment chatter to talk about the Artistic Finance Patreon page. And I want to thank our patron, Katie, who is on this call with us. Because not only does she join us every quarter for this panel and is our public accountant or whatever, but she's also a patron of Artistic Finance. So thank you, Katie. And then Maithreyi is not a patron per se, but Maithreyi did give us a one-time donation to Artistic Finance. So Maithreyi, thank you for doing that. You're an unofficial patron. All right, so if you're wondering what happens with the Patreon money that I receive for Artistic Finance, 15% of it goes to Patreon fees right off the bat, and that's a bummer, but a necessary expense. 25% I put into other artists' Patreons, or I give it to arts nonprofits. And then the rest goes toward our podcasting hosts, our step and repeat that I got for LDI that I'm very, very proud of. It goes into my microphones and stuff. And then recently, the most recent thing we've done with it is we're now paying $100 a month for a social media manager. So they work roughly an hour a week, and they're doing our Instagram and our Facebook and sort of our LinkedIn. So that is where the Patreon money is going. And I just want to say thank you to everybody who's a patron. You know, not all heroes wear capes, as my sisters like to say. And I consider the patrons heroes. So if you want to join up, you can do that at patreon.com/artisticfinance. And I, of course, welcome anyone. So now we can get back to talking about investments. Thank you for bearing with me. All right, and now really all I have is the wrap up. And this question is for everyone. What have we learned from doing these investments? So what have we learned either from the investment that you're doing, or what have you learned for something I'm doing or somebody else in the group is doing?
I think something that I've really taken away from tracking this over the past, over a year at this point, is just how important it is to diversify your investments in a lot of different areas, sectors, types of investments. Because I feel like every time we rejoin, like some people are up and other people are down. And then the next time we connect, it kind of changes or switches or moves somehow. And that is sort of telling me, at least like qualitatively, Katie can run the numbers, but it's telling me qualitatively that we're all kind of, if we combined all of our investments, and like had a really diversified portfolio between all of these different things, that we would generally do kind of pretty okay overall for the long term. So that's kind of been interesting to just like hear everyone's performance periodically and be like, oh, well, like I'm up one time and like someone else is down and I'm down and someone else is up, and it kind of evens out in the long term. So that's my takeaway.
I'd say, and one thing I think is really interesting I've learned in doing this is the investments in non-financial things. Like the wine, I've learned a lot about over the course of this. Then, last time with the addition of the Masterworks and things like that, and learning about alternative ways to invest in items that aren't necessarily financial instruments. And I think it's really cool that there's a lot of options out there now for making that more accessible to people. I guess I always just assumed in the past, like if you want to invest in wine or art or whatever, like you have to physically go buy that thing and then sell it yourself. And it's cool to learn that there's avenues to do that elsewhere. And I'd say, like, for myself, I think it's just kind of reinforcing some of the benefits of things like mutual funds, whereas my husband would probably tell you that he thinks that's like the granny way of investing, and he's always picking individual stocks and trying to find like he has some Tesla and loves it and things like that. He's always going after like tech companies and things like that. So I feel like this just helps kind of reinforce that message of like, even though it might seem like a safer investment in a market we're in right now, sometimes mutual funds actually end up returning more and it has less risk. So in times like now, it seems like maybe that's a better idea. But at least for me, maybe not for him, but yeah.
Well, what I love about one of the things that this group does that I never thought to do before is comparing it to the S&P 500 and using that as a weight to really kind of see where you stand with your investments. So that's definitely something that I'd say was on my learning curve as a method or a tool.
To add to that, Amy, I actually started seeing like more companies start like comparing their selves to the S&P 500, just because I feel like that is like a base or like standard, like everyone that like if you have a background in investing or are more like outside of the beginner realm, I think a lot of people base their structure off of the S&P. And so I've started noticing, even when I was digging around on the Masterworks website, like they were comparing their like return to that over the course of like how many years or whatever that they've been around. So I thought that was super cool.
Yeah, I definitely think too that like long before I even ever felt confident in doing any kind of investing, when I had like really low financial IQ, it's one of those things where like I knew the term S&P 500, but I didn't know why. And I didn't know what it meant or what the implications were. It's just such a force and a standard. So that's a good marker.
And I will say that I think I'll echo Katie's point, which is it's cool to see all the different options. Because I know I brought in Vinovest for wine, and Amy brought in Masterworks. But actually, like PayPal and the mutual funds, and then the specific bonds that Maithreyi is doing, those are things that I've never really considered. And then also Amy mentioned play money earlier, like this is our play money. And I think that's a really important point, that none of us here are relying, like this isn't our actual retirement savings. Sure, maybe it will be. And when Bitcoin goes to 1 million, like I'm going to be like, I'm retiring. But it's all like just so we can talk here. And what I think is important is the fact that we are investing. If none of us were investing, we wouldn't be having this conversation and we wouldn't be talking about this. And like, we all have our own lives. Like, we all have jobs. We're all freelancers. We're all doing this, but we're choosing to learn about finance and like do this. It's really good that we've chosen to invest in random things that, let's say, we wouldn't invest in our retirement savings, but it's like helping us learn things. It's like, again, I don't follow the news, so I really don't know where the market is every time we meet, but then I sort of learn, and it doesn't really change anything, but we're just able to have these conversations. So I'm just glad we're doing it.
Yeah, the conversation helps us all learn for sure.
And then I was just curious, are there any investments out there in the world that people in this group are now thinking about? Like, is there anything that anybody has their eye on? Like, I want to do that.
I wanted to get in on the I bonds when they were 9 point whatever percent, and I didn't. And then it's still a good number. So that's one of the things I keep thinking I'm going to do and haven't quite gotten around to. But I think I don't have a lot of bonds in my portfolio either. And I know that's not necessarily what you're supposed to do. But as an older person that, is playing a little bit of catch up, I feel, confident with the index funds I've chosen to be really aggressive right now. But I know that I should have some kind of bonds in my portfolio to keep things balanced during a downturn. So I've learned a lot about I bonds. Like, I guess I wasn't as confident to move forward with them because I kind of had heard about them, but I didn't fully understand it. And I feel like I understand it better now, where I would be more confident to move forward. It just seems like a good balance to have. And also another thing that I think is maybe similar, I don't know if you guys have looked at this, but utilities, are pretty good looking into that now too.
One of my stock picks is an energy company. So I don't know if it's utilities, but it's definitely connected and owns a lot of utilities or something. But it's up 40% in the last almost 2 years since we've held this. And it's paid out a dividend. It's like owning the railroads in Monopoly, I think, which I never did. And I have not ever won Monopoly.
Yeah, to that end, Amy, so in my kind of larger investment portfolio, my brokerage account, the one ETF that's been saving me in the past year when everything else was down basically was my energy one. It was it was steering the ship while everything else was sinking slowly. So hopefully that will change. There will be a little more diversification, but energies for sure, like in utilities and all those areas. I'm also intrigued, having heard people's investments into individual stocks, but like a variety of them, and how that's been kind of going for people. I'm kind of intrigued to like invest in more individual stocks and like maybe make like a small portion of my portfolio for that and just kind of play around with it. It's kind of fun, first of all, to like research different companies and really understand kind of what's going on with them and be kind of invested in their journey. And I feel like a fund disconnects you from that a little bit. But like when you're invested in that stock, you're like, okay, I have shares in Tesla or whatever. I better like see what's going on, and kind of understanding their journey. And so I think that's kind of a fun experiment, but also could be a good like portion of an investing strategy that may get you like it's higher risk, but it could get you kind of outsized returns as well. So I think that's something I'm going to do is like more individual stocks.
Interesting. Maithreyi, the very safe bond investor, is saying they're going to pick more individual stocks. I did not see this coming.
As well as very responsible treasury bonds to outweigh the stock risk. But yes.
Okay. All right. So since we last met last quarter, a listener messaged me and said they invested $10,000 in Vinovest in wine. Yeah. Right. Crazy. I know. So they just doubled our 5K investment. So anyway, all I'm saying is that this 6K special that we started with, okay, I did 6K for artistic finance. Katie did 3 $1,000 investments. Maithreyi did 2. Ebony did 1. Amy did 1, or $1,000 total. And then we have the $10,000 person who went into Vinovest. So that's $23,000. All I'm saying is that, small actions becoming big actions, like artistic finance. Okay, we have 150 listeners every week. So like compared to the 8 billion people on the planet, we're like, we don't even show up in a statistic. But we've moved $23,000, which is like I don't know. I'm sort of like scared by. I mean, it's not all one person's money, but it's still like that's some sort of version of compounding. All right. So, final question, which is, can we get an update on everybody's life, career? Yeah, let's get an update.
I'll jump in. I am doing pretty good work-wise. Just got back from Texas not too long ago. Gearing up for right now is like a slow period, and I have a couple of gigs lined up, and I'm sure slowly here I'll be drowning again, but it's very quiet, so I'm enjoying all of this like time and relaxation. So yeah, I'm pretty good.
I'm so happy to hear that, Ebony.
And the Eagles won. I went to the same high school as Jalen Hurt from Channel View. We're calling it B-side now. So like, East side, but like put a B in front of it. So very excited about the Eagles winning. Like that's super, super awesome. Super Bowl is going to be great. So I'm very excited about that.
I just have to chime in because I'm originally from Philly and I don't normally care about football, but I am a dedicated fair weather fan and I'm very happy for our birds. So in that note, life is good for the van life nomad here. Yeah.
That's so wonderful to hear, Amy. I'm really happy about that.
I guess I'll chime. I'll say on the football topic, though, I just looked it up while you guys were talking, and the Chiefs did edge out the Bengals there by a few points. So I'm on the Chiefs side, unfortunately. But fortunately for the Eagles. But so I'm excited to see the Chiefs going back to the Super Bowl again. But outside of that, I don't know that I have any major updates. Yeah, work has been busy for me, but it's good, consistent. So my kids are good. I'm excited to see Ethan in a couple weeks when he comes in town with his big life changes, celebrating them.
We're going to have a baby shower, and we don't follow sports. So somebody said, well, that's Super Bowl weekend that you're coming in. And so we're having our baby shower. We were like, did we do it at the same time as the Super Bowl? We're one day earlier.
Yeah, I was going to say, your baby shower's on Saturday. That doesn't affect it.
I also love that we talk about football on the quarterly updates. It must be how the season works out. Because on all the other 131 episodes of Artistic Finance, we don't mention football at all. And yet somehow every quarter on this, we're talking football.
Always on in our house. My husband's a fantasy player, so we're watching every time that football's on. We're at least checking on it. Not necessarily watching it religiously, but always checking in.
All right, Maithreyi. Wait, did you already give us an update? I can't remember.
Not yet. I have not been following football this year. I'm usually a very avid NFL fan, but this year it's been whack. So not as much. But I started snowboarding again. Just a quick little summary. Last December 2021, I had a hit and run accident, or was on the receiving end of a hit and run accident, and broke my clavicle. So on a snowboard. So I had to get surgery and all of this, and was very terrified to get back on ski slopes, but did it, and I didn't die, and all was well. So so I'm officially snowboarding again, which is fun. Yay! Thanks, Ebony. Yeah, and hopefully I've been going through this registration process to become kind of licensed as an investment advisor in my state, but also be able to help clients kind of outside of the state, depending on how many. The Colorado State Securities folks told me either last Friday or Thursday, or this coming hopefully Monday or Tuesday. And I didn't hear from them Thursday or Friday. So I think it's coming in basically either tomorrow or the day after, which is really exciting because that's been ongoing just to get like licensed. It's a huge process, taking exams and writing legal forms and whatnot. So I am very, very close to ready to help people manage their money, which I'm super excited about. So very relevant for this.
Yeah, super relevant. So it sounds like you're becoming a financial professional. So Katie's disclaimer is not going to work soon enough.
I'll have to give like a 15-minute now.
You'll be like, click on this link for the disclaimer that I had to do.
Yeah.
All right, 4 amateurs plus Maithreyi.
Oh, I think I'm still a bit of an amateur. So I'm still in the club.
Okay, well, my update is that Nicole is doing an amazing job with the newsletter, the Artistic Finance newsletter, and that's coming up the monthly one in just a couple days. Oh, I lied. Actually, this is going to air next week. So the newsletter just came out. Nicole did an amazing job with it for February. And if you want to receive that newsletter, which recaps all our episodes for the month, go to artisticfinance.com and hit the newsletter tab and then put in your email. All right. And then the other update is that last week we recorded the first Financial Independence Book Club meeting that is headed up by the one, the only Amy D Lux. It was a super awesome event. Had a great time. We had the actual author of the book, Lillian Karabake, on the show. They were amazing. Next month, we are reading You Are a Badass at Making Money by Jen Sincero. And so that meeting is February 26th at 10 a.m. Pacific, 1 p.m. Eastern, and 6 p.m. in London. Carl Faber, who is our guest on episode 100, is going to be presenting, and he is a badass at many, many things. But anyway, if you want to sign up for the book club or you want to get the Zoom link for that, you can also visit artisticfinance.com and hit the book club tab.
Wait, can I give a quick plug, Ethan, for your newsletter?
Oh, by all means.
I read your newsletter end to end every month. It's the best time, and Ethan and Nicole have the most adventurous life, and it's so fun to read about all your adventures because you include that as well, like in addition to your updates in artistic finance. It's always great to read what you've been up to and your baby. Oh wait, can I say that? Sorry.
Yeah. Baby's out.
Baby Roth Ira Steimel.
Baby what? Roth IRA Steimel.
Baby Roth Ira Steimel.
Baby Roth IRA Steimel is going to have a very adventurous and financial education filled life.
Yes. I know when I was trying to, and I still haven't decided yet, but when I was looking up gifts for you for the baby shower, which I know technically I'm not supposed to bring to the baby shower, but I was like, I feel like finance book for babies that I can find. Like, Ethan would love this. And I've actually found a lot.
Yeah, we need picture books. If you could find, because we want the baby to speak a language also that's not English. So bilingual, I suppose is the word. We want the baby to be bilingual. So if you could get a finance book for children that's also like in Spanish or French or German or Mandarin, whatever, you pick the language,
I'm sure
that'll be the one.
To find.
That's amazing. Maithreyi, thank you for saying that too, because every month we get to newsletter time and we're like, oh, we didn't do anything. Last month was just a moment ago. Like we didn't do anything. And then we end up with a 12-page newsletter. But nobody to be dissuaded. You can skim it. You don't have to read it end to end like Maithreyi does.
No, read it end to end. It's the funnest. I love it.
Yeah, I like it for the life updates too. It's, listen to the episodes to hear all the rest of the updates. It's nice to see where you guys are going and what you've been up to.
Amazing. All right, so that's it for this update. But before we all go, I just want us all to say our Instagram handles. So, and there'll be links to your LinkedIns, etc., in the show notes. But just really quickly on Instagram, Ebony, we can find you at
Ebony Madry.
Katie, we can find you at
KT, that's the letter K, the letter T, Buhr, Buhr. So Katie Buhr.
Amy, we can find you at
Utopia Dreamscape.
Maithreyi, where can we find you on Instagram?
I don't use Instagram much, but it's my first name, last name, Maithreyi Gopalakrishnan.
I didn't know. I thought you were just going to say Liquidify.
Or Liquidify. I guess I have both. I'm not very well versed with Instagram, I have to say. So LinkedIn is probably better for me. But
all right, LinkedIn for Maithreyi, or follow at Liquidify on Instagram. All right, so, me. You can find me at Ethan Steimel or at Artistic Finance. Everybody here, thank you so much again for your time, for your energy. Man, we had a lot of energy today. So hopefully I'll see you all in May for our Q4 review and our 3-year anniversary of Artistic Finance. All right. And then Amy and I will see any of our book club members on February 26th. So, and you're all invited. And you don't, also secret about our book club is you don't have to read the book. You can just show up. Yeah. It's wild.
Yeah, get the summary, get our takeaways. You can just type your questions in the chat or jump into it in the conversation at the Q&A.
It's amazing. All right, so that's it for today. So until next time, break a leg.
Thank you for listening to Artistic Finance. Make sure to subscribe. To access our show notes, transcripts, or resources, go to artisticfinance.com. This show is for entertainment purposes only. Before making any decision, consult a professional. This show is copyrighted by Artistic Finance. Written permission must be granted before syndication or rebroadcasting.